This is Martin from Secrets, the channel for learning about trading and investing. Welcome to a new episode of Markets Next Week, and this is analysis for the upcoming week starting from September 20th, Monday 2021. So if you're not subscribed, please subscribe right away and then share it to your friends so that they benefit and it doesn't cost you anything and it means a lot to us. Thank you so much. So let's look at what price action and patterns turned upon the market last week, right? Don't worry, we'll be seeing the charts of this in the next slides. This is a summary. Last week, the weekly had a green candle, and Nifty had a 2% of move, and then it gave up some of it later on. But it made an all-time high. It's very close to 17,800, and what ended up was a previous week was a bearish indecisive week, and it is a green close with big move all-time high this week. So Banknifty also moved up, right? It had a wider green candle, wider range green candle with a greater than 3% and gave up some of it, right? And the most important thing here is that the Banknifty broke out of the previous resistance of 7 months old, right? After 7 months, it had taken away that after a long consolidation or a rounding pattern kind of thing. So the Nifty daily candle, so we're talking about the weekly candle previous two lines, and now the Nifty daily candle had a bull trap. Bull trap is like you broke out above the previous candle and then closed below the high of the previous candle, right? Trapping all the bulls who had gone long, right? So that's what happened in the last Friday. And this was after hitting a new all-time high, it's 10 point away from the 700, right? So remember that this breakout of to the new all-time high of 17,800 happened after 5 days of retracement formation. Some kind of flag formation was there. If you look at the candle pattern was there in Nifty. The Banknifty also had this flag pattern, but Banknifty daily candle, if you see, it's a spinning top on the top of a rally, right, and an all-time high. Okay? And that too happened after week, 5, 6, 7 days of consolidation of flag formation on Banknifty also. That's what the price patterns are showing. Now, the volatility expansion had already happened. It's moving on the bands on both the indices, you can see. So this is what we are talking about, right? This is the daily on the left hand, then the Nifty had formed a bull trap and a spinning top right on the daily of Banknifty. On the weekly, you have a wide, good range weekly green candle after a small indecisiveness the previous week. Banknifty broke out after the hammer formation. This week you can see a very wide range breakout to make the new all-time high after 7 months in the charts. You can see weekly. Now Bollinger Bands, you can see that it has expanded completely on the Nifty, and Banknifty also started expanding. Support resistance, you can see that the Nifty has the highest resistance at 17,700, 17,800, and after that you have 18,000 rounding number. Now the supports below, the first support is 17,400 to 17,450, that's range, and 17,250 to 300 is the next previous swing low is the support too, and then below that you have 17,000 nearby ranges. Now 150 and 50, that these are all previous resistances, and this one is a previous swing low. So that's what 50 and resistance is support. Now look at Banknifty. This resistance is at 37,700 and 38,200 that hit previously. So that has to be taken out. It's a previous resistance. Next resistance above is 38,700, which is a projection, Fibonacci projection, levels, right? And Banknifty supports if you see 36,200 and 36,500. That range is the immediate support there. Then below that you have 35,500 and 35,900. That range, if that breaks, which is the Fibonacci 23 retracement. And then below, if that is also broken, you have 35,100 and 35,300. So that's what it is. So both indices are all-time highs. Good supports for both indices bottom level, and similarly all-time high resistance is also there, right? So uncharted territories, both indexes are moving on. This is what we are talking about. Look at the resistance supports, right, at the uncharted territory on the Nifty, and below plenty of supports down wherever we had consolidated or swing little or face resistance is all support zones now, right? Plenty supports even below the 70,000 is broken. Banknifty also see how it had broken out of the previous resistance of 37,700 the other day, right? It's a daily candle, and look at the breakout from the previous after 7 months, right? So resistance to supports is there. It's a projection in the uncharted territory. 38,700 kind of levels is the projection. which is 38% projection, and then the immediate would be 37, 30, taking out the 38,000 routing number and 38,200, right? So that's the first resistance supports. Downside, you have supports where it made a previous retracement, and then here also wherever it had faced resistance, it's acting as support. We're already seeing the levels. Now the momentum in the trend analysis, it's super bullish, ultra bullish, you can say, on the RSI momentum for Bank Nifty and Nifty both. We'll see the charts in the next slide. Now an 8 bar bullish divergence, 8 bar is slightly diluted, divergence is work with a small number of bars. So 8 bar diluted bullish mountain divergence is not yet confirmed. If it moves above the previous low, next day it can turn out to be a divergence move that can further take it above the all-time high in the Nifty, right? Now Nifty ADX indicator, which is a trend indicator, is showing strength. It has got strength as well as bullish zones. It was already in the bullish zones in all time frames on indices, both of them, Bank Nifty and Bank Nifty. Now it is showing great strength. That is, the trend indicator is moving up. We'll see that next in a second. This is momentum. You can see that there is the daily candle. This is daily moment. You can see it's super bullish on 86, 84, 85 kind of levels. Bank Nifty also it has broken out of the 60 RSI momentum. Now this is the momentum that we divergence diluted that we are talking about. This could take it back to the all-time highs. It's on the Nifty daily. It's not confirmed, right? So trend indicators, you can see the green line is the strength of the trend. Blue is indicating whether it's a bear or bull. This is already in bull. This is already in bull. Look at the strength. It's above 30. This is above 50. Super ultra bullishness in the momentum, and the trend is what is showing on both indexes. Now look at the VIX. The VIX had fallen down 8 to 9% and then shot back 8 to 10% of the entire. It's a good swing. So the entire week 8% of up move happened. Previous entire week more than 8% of down move happened. So the VIX is swinging, but it's trying to form a range. Now open interest data, if you see that, you can see that the open interest is showing that 70,000 is the support first. Highest call put writing is happening at 70,000, then 7,600 is put writing. After that, we have high put writing at 16,500. Now resistance, look at it, it's very far away. 18,500 is the highest resistance. Then you have 18,000. That's super bullish charts. But put call ratios, if you see, it's only 0.75. It's a long unwinding. Long unwinding is slightly bearish, right? People who have gone long is unwinding their long positions because of the fear of market getting stuck at 18K probably. So there is some bearishness in the open interest options that or futures data, but options chart is showing bullishness. Bank Nifty, the highest support put writing is at 37,000 and then 37,500 and then 36,000. Look at where the resistance. So 38,000 has to be taken, and after that look at the resistance 40,000. So that means 38,000 is taken away, means clearly closed above, means you have 40,000 is the range. It's more bullish in Bank Nifty. Put call ratio, if you take it 0.9, so, and it's a futures open interest showing that it's a short covering. Short covering is more dangerous than long build up sometimes, right? People who have gone short are now going long, and then it could break out like anything. That's why right, so it's bullishness all over the place in the open interest data, except slight bearishness in the futures open interest data on Nifty only, right? Now the VIX is shot up, and now it is above 15.2. It's a very high level. It's a very high level as compared to the previous several months of low VIX up to the 11 levels. So, but still, it's only 23% of IVP that is happening, right? So we may have to wait. Sellers may have option. Sellers may have to wait for some time for getting good premiums, and but definitely there is a range formation in the VIX that is happening. Volatility regime may be slowly changing, but still as of now, because previous week we have 13.5, then we have 15. So what is the range? Is 35, 13 and 15 is the range that's going to be on for some period of time, or we don't know, right? So volatility can continue to be spiking at the all-time high levels, right? So until now, those big rally of several months that happened, we had always the volatility that was dipping down. Now we have the market rally with the volatility moving up, right, which indicates a fear, right, in the market, right? So that's open interest data, the charts that are showing there for the Nifty on the left side, right? You can see that it's 18,500 is where the highest resistance is at, and the fight is for 17,600 and 17,800. That's what it is. But Nifty, you can see that it's 38,000 that has to be conquered, and after that, the highest call writing is, we already seen that it's 40,000k, 50,000 basically. Yeah, now this is sectorial watch, right? We want to see how the different sectors. The IT index, it further moved up, right? This vertical move all along, and now last week we saw that there is a reverse divergence, that is the momentum, and it worked out and met. It's 4% move happened, and last 2 days it gave a little bit, half of that. The dollar strength continued moving up. It means it is further supposed to move up. But remember that the weekly there is a diluted divergence, that is bearish, and that cannot be negated out, right? Especially some corrections can be expected anytime. But as of now, it's super bullish in the IT sector with the dollar strength. FMCG also moved up 2%, but gave up a little bit, right? It now has a bullish reverse divergence that can make, that indicates that FMCG can further move up. So defensive sector can continue to move, and the market is fairly consolidating also. So two sectors bullish. Metal slipped and lost the momentum, right? So the reverse divergence that was there last week did not work out and did not meet the targets and gave up. And now we have to wait for the momentum to catch up to the bullish one. So then we can pick up the stocks in the metal. But auto is gaining momentum. It moved 2% further and we have left some more. But the weekly momentum still has not gone about the bullish ones. Daily has moved. Short term it is gained the momentum, it is fine. It has closed above the previous support zone and it is heading towards. It looks like so. It is almost. We just have to wait for some more time for momentum to catch up in the weekly also, and after that we will join the IT sector if it works out. Now pharma is facing resistance and it's bearish. So pharma and metal same. And reality, right? Reality is also some kind of bearish pressure is seen because inverted handles too have formed on this reality sector. We have to be careful, but it is on a breakout on a medium time. If you look at there's a cup and handle formation that is breaking out, and then handle also is formed, and the breakout also happened. There is some indecisiveness, some bullish bearish pressure may be there for some time, but overall it is currently in the bullish zones along with the FMCG and the IT. So institutional participation, if you look at 6,465 crores of FI buying happened last week. That is the only reason market has shot up like this. Anything in the Nifty and the Banknifty. Domestic institutions sold because their profit booking was near to 3,000 crores. Selling happened, but look at the FIs buying in 1 week. That is very positive, very bullish. Now even the derivatives that also has risen last week. If you look at these stats. Now, global markets, this is very important. The US markets had consecutively closed bearish candle 2 times after hitting all-time high. This is something that will be very cautious. Even when Indian markets are performing like anything, the global mother market US is showing bearishness since 2 weeks consecutively. No, dollar has strengthened. Right? It had dipped and it had rebounded, and then again it is heading towards breaking out. So dollar strengthening is happening. There is a reason probably US stock market is going down and the dollar is strengthening, and crude oil is hitting all-time highs. 17% to last 4 weeks. That's what happened. Currently it is at 74.5 resistance zone. Right? That is not good for our economy also. Now the index, the USDINR currency pair, it had rebounded from the channel edge, and then it had green close, and it is this week also it's showing a green. It's a green bar, and it looks like it is heading towards 74.2 kind of the resistance on previous. That's where it is heading. But when the dollar is strengthening, the gold will obviously dip. So dollar strengthened, and 4% in 2 weeks the gold had fallen down, and it is at the edge of the support zone. If it goes down, it can go really down, right? But it is within the channel. Most likely to consolidate around this area and then again back up, right? Unless the dollar breaks out to very high levels. And that's it. So some actionables, stock picks for the week. So interglobal aviation broken out. Look at the inverted head and shoulder pattern, which is broken out and given 18.89, so 19% in just 1 or 2 weeks from the neckline of this thing. So it may be you may have to wait for some retracement to happen by putting the Fibonacci retracement and then enter. The breakout may continue further, but immediately may not be suggested, but a swing trade it can be used. This is a weekly candle, remember that. Now Kodak Mahindra is another bank which had which is also seems to be having a flag and pole pattern, and it has broken out of that last week, so it can further go up, right? There is change in polarity that has happened. There is a resistance zone which is broken out in November. It has come back and then bounced back. So change in polarity, flag pattern, and momentum is bullish on. So it's a good Kodak bank. Now for the on the index, the actionable here is a double color spread with the range is very good. 17,300 is the bottom side, and then the belief is that 18,000 may not happen this week at least, right? RiskReward is okay, and the probability is good enough, 74%, right? So capital requirement is also less. Depending on your risk appetite, you can take more lots and then play the game, right? Adjustment is also possible, right? In case there is a breach of the peak highs of both sell positions, you can adjust. Roll the other side, the tested side, the non-tested side. You can roll up or down depending on which side it's moving, right? So it's giving a good range in the POP, probability of profit basically. So it's an action on the index Nifty. Now to wrap up, the bulls are roaring, right? It's an all-time high. The banks also joined the party. It has broken out the 7-month resistance and momentum and trend ultra bullish. That is what. So there is no other option other than being bullish, right? So position entry still it is you have to be little cautious because the US market has shown red the last 2 weeks consecutively, and there is no major interim correction that has come for long. 17,000 to 18. A few weeks time it has happened. 17,000 is only 700 points of move in a couple of weeks, right? So corrections may come in any time. Resistance may be there near to 18,000 because it's a rounding psychological number. So you have to be cautious. US market is known. You have to be cautious, but there's bias is completely bullish considering the trend indicators, candle patterns, and the momentum indicators, right? Now India VIX has turned to some new range. It's kind of forming a new range between 13 and 15 levels, and we'll have to get adapted to it slowly, right? The premiums hopefully may increase now, and sellers may eventually, after some more period of time, may get a range where they can make more money, unlike the very big swings that was happening for several months now, right? Since the trending moves are happening since many weeks now, the buyers also might have made some profits out of it. Now, vertical spread is something that we can consider instead of going for a naked buy, right? So you can go for bull calls, for bear calls, for all of these spread strategies are better, since at a peak level always reversals, profit bookings and all that can happen. So you just cannot trail and go further. So for swing also, weekly or monthly, whatever it is, vertical spreads would be giving the margin advantage, as well as at the same time it will give you more probability of win given the current conditions. So positional long entries, already long means it's just have to trail at the support and the resistance levels that we already know. Wherever the previous swing lows and wherever the previous resistance are there, will act now as support. So depending on where you are entered, you have to exit the trade, or otherwise if it moves up, you have to trail accordingly depending on the next support level or the resistance level, right? So that's summary, right? I hope this has given you an idea on what happened in the last 1 week, and also it will give you some support in forming a trade plan for the next week. If you like it, hit the like button and share it to your friends and colleagues and whoever you may think it benefits, and it would help us a lot. It means a lot for us if you hit the like button and subscribe and then share it to us. Thank you so much for watching this, and have a happy trading week ahead. Happy trading, happy investing, and happy learning. Thank you.